Good morning, everyone. It is January 7th, 2020. I'm doing another update. I'm going to start by reviewing what we did yesterday and what happened overnight. So we had taken two trades. We took one on pound USD and we took one on Euro USD. And we still have the Euro USD in here. It did come down to 50%. It hung around here most of the night, and then in the middle of the night, when London opened up, it started dropping down. And I now believe it's going to continue up again. Now, as you may remember, I had moved a stop loss on pound. I had it down here, and I had moved it up yesterday in my video. I showed that, and I got taken out this morning. That's okay. As you can see, I'm now at 248, and we took a loss here. I'm going to sort this by time. So we took a loss of $3.83. It's a little bit more than 1%. That's okay. And then I start looking at why did it come down here and what did I miss. So apart from the market being extremely slow yesterday, the other part was I could have ran a tighter stop loss yesterday. I could have sat here at 38 and then cashed out at $6.48 because that's where he went. I went in over here and he went all the way up here. That would have been $6.48, and my stop loss would have been about $1.80. But coulda, woulda, shoulda. I'm not crying over spilled milk. Pardon me. What we see here is when it went up, the volume, we see here that the volume is low, so the supply is getting less and less, and they're selling off. And then there's the buying is starting, and then it comes up here, and typical to a market maker move, testing the supply, see if there's more in here, if they can pick something more up, which is to me an indication of the overall where this is heading is definitely bullish. And it came down here, took out the stop losses, such as myself and many others. Now this level here, when we look left, we don't see anything that it really ties into unless we go out. I believe this is where I did it. Let's see. It might have been 15 minutes, but I might have done this. So if we put that here and look left, we see that this is indeed a level of support resistance. If I just temporarily put a line here, just so we can follow it, and we're going to make it a different color just so we can go out and take a look, make it a little thicker. So this is where it came down, and we have the first point here, we have another point here, 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 and over here, and as we kind of go out, it just continues over here, over here. So this line that I have below it could have been adjusted to reflect that, but that also has a support line. So if you would have scalped that, both of those lines would have been needed. But as we continue going out, we continue seeing this thing actually being a previous support, and there's a similar setup, and funny enough around December, and then there's another one here also in December, another one over here, December. So it's actually quite a strong support. But the other thing is obviously also that it coincides with another level that I talked about, which is 61.8, which is the level that I said I like to see it come back down to before you believe that it's going to go north. Now, we see that from here, the price is falling, and that's consistent. And then it starts changing, and the volume goes up. And it goes, I would say, goes above the average. And so the volume goes up, and that's consistent with someone either dumping or picking up. So we see a long candle here, 25 pips, but the body is not proportional to the volume. It's 10 pips, but the volume is much higher. So someone is picking up and they're picking up this volume here that got created by stop losses being picked out. So I definitely believe that we have another move up. Now the question is if we're picking the right time. So one way to look at it is that we need a new high, and so this candle is going to potentially do that and get through this now resistance line, previous support. We can continue going down and see what's happening, and we see a break above this support resistance, but we didn't have the confirmation candle, so we're in a holding position to see what happened. It's hard to see here, but this low is all the way down here, so waiting to see if we're going to get another break above this resistance with a confirmation, and if we do, then we're going to go long on that one. We can go all the way down to 1 minute and take a look. Here is the high that we want to get past, and down here is the low. So just waiting for this one to play out before I take a trade. Now the other thing is someone was asking me why did I take 001, because they know that I usually say that for each $100 you have, you can take a 001 position. So I have 2, which means I could take 002. Once I get to 3, then you can take 003, but that's the total of open trades you should take. So since I have 200 and I had $252 yesterday, I took 2 trades and they were equal to 002, but I could have taken a higher trade. If I would have taken a 003, which is 30 cents a pip, I would only have been allowed 48 pips roughly before I hit my 5%. And that would have been one trade, and it could have been this trade that would have gone against me. So if we look at where we entered yesterday, which was here, and 48 pips, we would have been safe on this one, because 48 pips would have been down here, so which is where our old stop was. So we still would have been safe for the moment. We don't know what this would have been, but we would have been down much more. So I'm going to continue taking 001 until it breaks 300, and then I'm going to take it higher. And I'm going to do that just so I can have more trades. For me, it is about having several trades, and then some will be losers and some will be winners. So I'm going to continue watching this one. Meanwhile, I wanted to change this volume indicator that I have here, which is part of the template. So I'm going to go over to an empty template, which is this one. I'm going to go in and update the template, and I'm going to take this volume out. So now we don't have the volume in here. And also, other things that you do here before you save is you can put it on 15 minutes. You can zoom out to a level that you want to start at, and then you can save the template, and all that stuff gets registered in the template as your default settings. So So now that volume is done, and I'm going to go in here to indicator in your navigator and indicator, and I'm going to go again. This is a simple volume indicator, but better than the one that's baked into the template. So I open up volumes, and at the bottom I have the volumes, and I'll just left click and drag it onto the template, and then I have my value up bars and value down. So you can see the difference. When the volume goes down, then it's red, and when the volume goes up, it's green. Then you can put in different levels if you want to, and you can define what time frames you want to see it at. I want to see it on all. I don't have any levels. I do intend to make these lines a little thicker, and this is how it looks like. I kind of like this. It's a little bit easier to see. You can see the peaks and valleys here. It's easier to read. So now I'm going to make this part of the default template. So we'll just pick the default and save. So we're good there. And now I can update this. We already know this pivot level. We have a 50, and here's the interesting thing is the 50 was well respected here. You had a bounce here. What we're looking for now is a break above this, and obviously back up again. We see the volume dropping here, meaning the inventory is lower and lower, and we see a pickup on this candle, which has a half a body. So pick up, someone's picking up the supply, what's there, and so it's reasonable to expect that we have a move up. So we'll let that one sit, and we're just going to go ahead and update this template. We'll take the default, and here we are. As you see, the zoom level is out, the volume bar is here, and I can work my way in if I want to. Now the fib level is gone, and I don't want that to be part of the default template. All my support and resistance are gone, so we're just going to take a quick second here to update this one. So while I do that, you can run off and get some coffee. I'm going to pause the video in order to save some minutes of your life. Again, actually I'll leave the video running here so you can see a good repeat, of course, for some people, I guess. So I'll leave it on. If you've seen my previous video from yesterday, go get yourself a cup of coffee or whatever, and I'm just going to knock this out. All right, for anyone that's currently listening, I'm looking to work around the price first for support levels. So this is what I do. This is the last line object I had, so I'm going to change that back again. And I'm going to make that red and not so thick. And actually I'm going to change my line colors not to red, because that's support and ask if I ever want to turn that on. So I'll go with something crazy, orange. I actually wanted this. So I'll try to do a few lines over and under the current price. So we have a couple supports here, and I'm going to do a couple of support resistance above. And since we have price here where we bought, it's hard to kind of put a line there. So I'm just going to, until I zoom in a little bit. And, so I'm going to get into 4 hours and start putting the line in here. And again, support and resistance doesn't have to be pinpoint accuracy. It is a point where the price has come up or come down to and been rejected. That's what you're looking to paint out here. It gives you good insight on where you could expect changes as the price travels up or down, however you trade. And it's a very, very strong method of identifying what happens to price. And I gotta go out a little bit, but in. So I'm on D1 daily time frame. I want to put a support line here, but I can't because I got my profit line here. So I'm going to move the profit line for a second. And I am going to put a support and resistance up in here. Let's see what we have. We'll move in. And I'll come back and adjust the profit level in a minute. We have another one here where we have the stop loss, and let's see if we can pick it in here. There. I'm gonna adjust this one a little bit. Into 1 hour. As we get closer on the time frame, like 1 hour on a smaller time frame, we'll also get closer to price. So this support resistance has been respected over here. Price have kind of consolidated here, which is consistent with this area here, here, and here. We'll keep going in, see if there's any more levels. Maybe 1, 2. Sometimes you can just turn on the crosshair and see if this area makes sense, and that area does make sense. The crosshair, like I showed yesterday, I just click my wheel down and the crosshair comes on. That's the shortcut. Or you can go up here where it says crosshair, or you can Control F. Whatever turns your fancy on. Okay, so I think I've got a pretty good idea here. Don't want to get much further down on this. I could go on 15 minutes and start painting some stuff here. I'm okay with this for now. Zoom out a little bit, see if I'm still okay. We have one here. That point there. I'm going to leave that one alone. All right, so all support and resistance lines are in here that I care for right now. Checking this one again. This one is fine. We'll leave that one alone. And now, since we're here, we can take a look. We see the volume is picked up here. This is a big volume block compared to here, where we had the volume much less than here. So here is an area where the trades are going into kind of a congestion, accumulation, or can also be distribution. We'll talk about that in a different video. But we see the volume picking up here, meaning you have more participation from smart money, market makers, market movers, large cap investment funds. So they're getting in here, a lot more participation. So something is getting ready to happen. And as you can see here, if we look here, we have kind of low volume. The volume is starting to build up. So someone is selling off, for instance, and the volume starts dropping again. And now we have price is dropping, but the volume is starting to pick up, and then price is dropping, but the volume is dropping, but the price is going up. So something's about to turn, and here we have the big sell-off of 46 pips, and then it comes down here, and someone down here is starting to pick things up, and then you have a equal move up again, and you have now a double top over here, and then the volume goes down again. So accumulation, distribution, and that's the name of the game. When you go out on bigger time frames, it gets a little bit harder to see here because my zoom level is so far out, but you can go closer and you see here what's happening. You see the volume going down, price is going down, so that's consistent, and the volume is starting to pick up, but the price is dropping. You have a bearish candle with a volume going up, some more participation. So that's an early sign of something about to change. Higher volume here, small body, high volume. So someone is starting to accumulate or distribute, and the volume keeps going up, but the price is staying or falling, and it's testing the supply levels. And then we get down to here. Volume is very low, so supply is low, and we're starting to get people participating in picking up the remaining supply, and then we have a big move up, almost 200 pips. Okay, that was a little bit of what's coming. Lower and lower volumes, so there's no push up here. Price is being driven down in order to create supply. So think about it as a warehouse. The money maker or market movers are building up supplies. They distribute, they sold out, which is consistent with a move of 81 pips. They're good here. They're taking out some profits, and they've driven the price as high as they can. They have no buy-in to drive the price higher, so now they're selling off, and the price is dropping a bit, and that's what's happening. So we're just waiting to see what's going to happen here. We're still 15 minutes. Indecision candle. Another indecision, so something is about to change here. So we got this candle here, volume's picking up. We have another candle here, close lower, but the volume is obviously above average. So there's a change here. Big volume compared to this, with a smaller body. So someone's picking up stuff here. So we're just waiting for the right change. So we see here price is dropping, but the volume is increasing. So those two are contradicting each other. So right now they're testing the supply to see what supply is left, but more and more participation, smaller bodies, but a higher volume. So something's about to change. There is a trading style that I use that usually calls for when you have a swing high, you look for price to come. I'm going to take this one down. I'm going to use a box. So an entry point could be from the high of the previous down candle to 50% of this candle. So we're going to wait and see what happens. Break below that, and that means we have additional supply. So then we look for the next low. But here the supply levels are being tested, so we're going to see if we may have the entry point coming up here. We're down on 5 minutes, so a lot of noise. but you can see the volume is increasing here, so more participation. So we'll wait. Meanwhile, I'm going to hop over here. I did a small recap on this yesterday where I'd said that I had drawn this little gray box here and I expect the price to come up and then drop, and it surely did. And then I said it wouldn't be unusual to see it come down here to 168. That would be the second profit level. It didn't quite make it down there, but it did make it down to this level, which is the around 127 level, which is your first profit level. And this area here is obviously a known area. So you see I have crosshair lit. I'm going to pull a line here just to show why this makes sense. So we came down here twice, so double tap. So at the second tap, you should have fully expected this move up. This was happening while I was sleeping, so I didn't care for it. But price came down here, and if we look left, this is the area where it came and turned, and it is an area of support, previous support, so makes sense. But I just wanted to show that it does. These fib levels are usually well respected. Now we have another top here, and prices again failed to break through. And this is a very, very strong level here. Just look left. So strong that we need to have a line here actually. This is one of those golden lines, and we'll we'll do this. We'll put not a yellow because that doesn't look sane. Put a thick blue color to indicate this is an extremely strong area of resistance support. In this case, resistance came up, failed, came up, failed, came up, failed, came up, failed, fail, came down, hung around, broke through. So it's reasonable to believe that price will continue down here. So let's get a little closer and see what's going on. I'm not going to update this template right now because I want to try to see if I'm going to take this trade or not. We have a lower high, so it's reasonable to believe we're going to have a lower low. And so from here, potentially come back down here, so we could have a 30 pip move on 1 hour. We're down here. So if we now draw some new fibs, we're going to take these off. So we're going to draw the first fib from bottom to top. And we saw price went up here, came down here, 61.8, went up, failed again. So now we want to find out where could this potentially go. Or we could have, could also have just a small retracement here if we draw from most recent low. Again, 61.8, price bounced, went back up, but it is failing here. And so price went up, but volume went down, and volume keeps dropping. So I think I'm going to draw a fib from top to bottom to find out where could this go. Actually, wrong. So we have take this, oops. We gotta get closer. So I'll take this off, and now I'm going to draw from the top to the bottom. But we have this actually, there's another level here, 70.5, which is the sweet spot, and this is consistent with that. And price failed, but we're around the 61.8. But just as an example here, let's modify the fib properties and add another level. Five. Let's see what happens. Here's my 70.5, and well, it's spot on. So we're gonna go short here. I'm gonna just try to come down to the double bottom here. It's 27 pips. Here's the previous high. So we'll take a low risk trade. Put the stop loss here. That's 12 pips. That is just too darn tight for my taste. So I'm gonna put it up in here. If it does change this much, then we need to get out anyway. So let's see, what do we got here? We got 20 pips, $2, so a little bit less than 1%. And we have 27 pips here. I'm gonna put this one down in this zone, which I called out yesterday. So we're sitting at 38 pips. We'll leave it there. This is also, some people will recognize this as an M formation. If you look at it, that's the first top of M, the middle of M, the second leg of M, and then this. And so some people will wait for a break of this. This is a head and shoulder, reverse head and shoulder. Actually, head and shoulder. So a break of this and people would go short. I'm already short, so I'll just leave this one here. I think this is a pretty good sign. And we know that this resistance has been respected in the past. So so leave that. Let that baby run. Get back out here and take a look what's happening with this one. We had another try here. Try to push down and look at the body. Small body, bigger volume, and the volume seems to be increasing. So again, just waiting. But definitely, I'll definitely look for a trade on this one today. We have a new high, but I don't like it. Small body, small volume. I'm not liking that one as a confirmation yet. I would have liked to see a strong candle. This is not that strong because this means the price opened here, went all the way up here, and came back down. So there's still some pressure. The bulls are starting to win, so meaning a move up. It's still holding steady, but not by a whole lot. So we'll wait and see. There's also a resistance right here. So I'm going to wait a little bit longer for confirmation, and then I'll take a trade. So I'm going to go ahead and pause for a second to save some time, and I'll be back. All right, so I'm back. I feel like this is starting to change here on pound dollar, and so I'm gonna stick my feet into this one and make an entry here. We had a new high here, so I'm just waiting for this candle, the active candle, to close. I would like to see a close breaking through this resistance. I'm on 5 minutes right now, so if we look on 15 minutes, we can see we have a strong candle here. It is a bearish candle, meaning the close was lower than the open. However, small body, huge volume. So there's definitely a change here, and then we have an indecision candle, and then we're starting to see this candle up here. So we're at 60, we're at this major support level that we drew out earlier, and I do believe we're going to see a push up here. So on 15 minutes we would like to see a close above this level, and preferably we would like to see a push up here before we go long, because we'll take out this resistance right here, which is consistent with this resistance here and this resistance, and this whole level here that basically creates a resistance. So if you see, if I put my crosshair on this candle top, the high, and you look left, now you can see me looking left, that ain't gonna help you any. So I'm gonna move my cursor over here and put it over here where price has been rejected and it was previous support. It's currently acting as resistance, and you can see that coinciding with this high here. So smart thing would be to wait for a break of this. That's truly a strong resistance here, and I feel that it is so strong that I should really move this one up here. And this is the thing that you'll find yourself doing, finessing some of these support lines. I feel that this is a better support resistance line, and then we have a double here, and we have a double here because we were talking about it yesterday. When prices come down and make a double bottom. It's not necessary to have to, but there's a reason for it, because on the higher timeline that comes down here and we get some peaks. So you could say that you have finessed your entry point here, because you know once you're inside of this area, whether you're coming down or coming up in that little area here that we have two double lines, would be a good area for an entry. So you can see price came up, got rejected, went down, came back up, broke above that, and there's your entry right there when you came back and retested, and you would have been in for 150 pips, or just about. So I'm just putting you on notice. I think I'm going to just wait to see a little bit more confirmation. We're not in a hurry, and sometimes the best thing we can do is sit on these hands. You put them under your butt and you sit on them and prevent yourself from taking trades too early, because I think way too many people, including myself, we take trades because this is addicting, but we take trades because we need to take a trade. It's just the mentality of it, and only to see the price go the opposite way. And I know this will ring true to a lot of people watching this, that you just entered a trade, you felt like you've done everything you needed to do, and this should go up or this should go down, whatever direction you had, just to see the opposite happening. So sit on them until it's time. Try to trade safe. That's what I'm trying to show here. I'm not necessarily trading like that on my other accounts. I'm a little rougher, but I have the room and I have the ability to do that. I can sit on a drawdown that is to other people almost to the point of offensive, and I don't care. I can handle it. And as I sit on large drawdowns, which I do, I continuously trade, and I keep filling up the bag of money while I still have a big drawdown. I have trades that are now sitting since May of last year, and that's okay. I have been all the way at the bottom with those trades, and I've taken them up as the trend has turned, and I took some going down. Now I'm taking some going up, so I'm okay. I keep filling up. I keep making my daily goal of what I need to make to feel comfortable and be able to do this full time. So, and that's the intent, to get you guys to that point. I'm doing this video because I know a lot of people don't have a lot of money to start with, and you want to see if this is possible. And it is possible. You just have to be patient. It takes a long while because we have a small account. Our positions are small. We're only growing by 10 cents. So it's not like if you start with $250, you're not going to be able to quit your job tomorrow. But if you think Forex is get rich overnight, I can tell you it's completely opposite. It's get poor overnight if you don't behave correctly. It can definitely take you to become a full-time trader, but I'm not kidding when I say sit on these. If the trade is not there, the setup is not there, you don't see the right things, sit on your hands. Don't take the trade just because you're afraid of missing out. I only have 4 charts right now. I have Euro USD, Pound USD, Dollar Swiss franc, and Dollar Yen. But on my other account, I have 20 some charts open, and I have a scanner that runs for me that alerts me of when I should pay attention to the chart. So if I miss on one chart, that's okay, because another one will ping soon enough, and I'll find an entry. So, and I will share that with I will share that scanner with my pro membership soon. First, we want to try to get through the basics here. So again, $250, you're not going to be able to quit your job tomorrow, but you can definitely get this $250 within 30 days to $500 or $1,000 or even more. But the beginning is slow. It just is, and you have to be patient. So stick with it, because remember, you put the money in the bank account and you'll get 1%, maybe 1.9% at the best. And if you have $100, you get $1.90 by the end of the year. Wonderful. Here you can make 8% a day, and you compound that, and yeah, turns out to be very good returns. So returns that a lot of people would like. So, but if you don't do it right, the $250 is gone overnight. So again, be patient, wait for the right setup. As we can see here, we're not quite right yet with this trade, so we'll wait, and I'll pause and come back. All right, so we're back, and I'm back just briefly here to show we had a breakthrough here below this level, and we're now this is now red because it's within 10 pips of being called. We have 5 more pips plus the spread, so we're getting close to losing out on this position as well. The only thing that potentially would save us here is this level here. Now there's one thing I wanted to show. I'm trying to take everything in strides here, and that is I don't trade on news, but a lot of people do, and the moves that we've seen can be because of certain news items. Market is fixed as it is, so the news is just used to drive the market, the market to a certain point where the money market movers want it to be, and the news is kind of the disguise to drive it to where what levels they want the market to be at, so that they can increase their profits and stuff. But the news really doesn't drive the market because it's already been defined. So I'm hoping that this shows up, so I'll find that out here. But 2 places where you can see the news. One is myfxbook.com. You have to get a login there. You don't have to, but I would recommend it. It's a good site. They have some streaming Forex news, and they have an economic calendar. And the economic calendar is what you want to see. So this is the view that you see when you come to myfxbook.com. Hit view all here. And you get the calendar. And you can see here January 7th, all things that have a check mark has been announced already. And if we wanted to see why did the pound drop earlier, we have the retail sales in Europe, and then we have the 10-year bond auction. This is a small news event, that's why it's green. These are high, and so all of this is tied into market moving. Again, market is fixed, so but you can use the news if you want to try to home in on all the volatility created during those news. And you could sort it here on my FX books. You can sort it by just high impact and medium impact. You can take away low because low doesn't do that much. And then you can look at what high impact news events are coming. So we see here today we have the factory orders. And if you wonder what it is, it's released by the U.S. Census Bureau, measured total orders of durable and non-durable goods, blah, blah, blah. It's measuring the industry and kind of gives an indication how we're doing in U.S., for instance. And then you have Canada, and then you have non-manufacturing PMI. So medium to high, these things should move the dollar and the Canadian dollar around, so you can use that to your advantage and play it around, and you can look at the whole week what you got. So there's a pretty busy week here when it comes to news events, and there's several high things where if you're running tight stop losses, when a high news event comes out, the market movers can use that to trigger stop losses and things of that nature. They can disguise how they are playing the market by using the news events. So anyway, and this is not a conspiracy, it's just the facts. There's another site called Forex Factory, also very good. Both sites are offering you to have your own profile, blah, blah, blah. When you come to Forex Factory, you can go to calendar, and I have done that so here, and it has its kind of structure of news events. So here's Tuesday. There's a little play button here talking about the next news event according to their calendar. It's a bit different than my FX book. So pick your poison, whatever you think looks the best. I'd recommend you take a look at that and figure out what you like. And that's it. So that does impact the price, and we see here we were short of getting stopped out, and most likely we will get stopped out. So it's okay. It's slightly above 1%, so overall we will have lost. We'll lose $3 some there, and we lost $3 some here. So let's call it 4 for good measures, and 3 there. So we're $7 into it, and at just to show everyone, you have $7, divide that by the starting balance 252, and we have lost 0.02.7%. And we'll live another day. And this is why it's so important to be able to not trade your entire portfolio. Now we've lost 2 trades, and that's okay. We can come back from this. Had we played a higher lot sizes and all that stuff, it would have been a bigger impact to our account. We're talking $7. We could make that back on 1 trade. So it is what it is. Learn how to take your losses. Don't sit and mop around on it or mope about it, or I could have, should have, would have, and all that kind of stuff. This happens. Learn how to deal with it. I kind of like to teach set it and forget it. So what you set your entry and you set your stop loss, don't mess around with it. If you lose, you lose, and learn from it. And then take a new trade. Manage your risk. correctly, and you can continue trade. We could take these trades for a whole week and we'll still have money left in the bank account. So not particularly worried. You will have losses and you will have profits, and since you're trading a 2-to-1, your profits will, at the end of the day, at the end of the week, at the end of the year, your profits will definitely cast a shadow on your losses, and you will regain, but only if you're smart. So be cautious, and that's it. Getting back into pound dollar, nothing's happening here, and maybe very little will happen until the news are being released. But again, take a look at this. We have a pivot defined here, and it's a very good mark. If you look left, now again, me looking left doesn't help you one iota, so I'm going to draw a line here and see where this line coincides with. Now, that's the line. Look left. Price hit, price hit. It's a good line, and if you remember, I talked about yesterday, we like the 61.8. It's a good area to trade off of. I have another area. Remember the area that we added in. Let's fix this fib. Get back down on fib. Let's fix this fib. Let's add that sweet spot that I like. 0.705. Let's give it a name. Sweet spot. All right. Save. Here is the sweet spot. This is when price comes here or close to here. That's usually the best place. We're really inside of that area where I feel like this is a good area to start taking long, but we haven't really hit the sweet spot yet, so we'll just push this a little bit left, and we can see when price comes down to it. We're right there, so we'll wait. Take a look. Here's our other trade. Down, up, down, up. We have a new high. So we could have a retest of this area here. And then a down, or we could have a better definition of the M. So again, first leg of M, middle of M, second leg of M, and then a big push down. So how long would this push down be? It potentially would be as long as this leg would be, so 31 pips. So 31 pips. We could come down here, we could have a very nice M. We could come down here, which I'm banking on. So this one looks good. I did the support and resistance lines on dollar yen. It's consolidated and just sitting here being absolutely boring. So this one will wait for a breakout from this box and take a trade. Getting back to Euro USD, looking at what's happening. If we get taken out, so be it. We'll live another day. Anyway, I'm gonna stop the video for today. Just know it's January 7th, 2020. If I get stopped out here and I get a break up above here, I will go long on Euro. I still believe that Euro is going to go higher, and I based that on it broke through a major resistance here, and I believe it definitely is going to go higher. So I will be taking a new entry on this if I get stopped out. Again, fib on daily. From bottom to high, we have retracement, very, very common. Look at this retracement. We're almost at the sweet spot, guys. Almost. We almost came down there, and then we went back up. So I'll be definitely getting back into this one if I get out of it. I firmly believe this is a bullish one. So, and I'm waiting for pound dollar. I will be entering this one as well, and I will run up to 5% in open risk on all trades. 5% is my max. I will risk 5%. That means if all trades go against me, I lose 5% of my equity, which is now, not at the equity, my balance, $248. You want to know what 5% is? It's quite simple. Take 248 times 0.05. I'm allowed $12.40. That is 5% of my total capital. So if I have all trades open, I set my stop losses, I should not exceed $12.40. So again, I will be going long on pound dollar if I see the right signals. Right now we just see congestion, and that could be related to what we were looking at here. I'm going to go to my, we have 50 minutes left for some news events here. So let's see what happens. That will be 50 minutes. That will be 10 a.m. This one says 11, but I've always had problem with their time. So anyway, that's it. Thanks for today. I'll see you tomorrow.